Hello, due to the computer's problems, I cannot access to my cameras. So today's presentation topic is emerging markets. Emerging markets refer to the stocks or energy markets of developing countries. According to the authoritative definitions of the International Finance Corporation, if a country's of region per capita gross national product does not reach the level of high-income countries as defined by the World Bank, then the stock markets that countries of regions is the emerging market. Some countries, despite their level of economic development and GNP per capita, has entered the ranks of high-income countries, are still considered emerging markets due to the lagging development of their stock markets and emerging markets mechanism. And the internet is an emerging market in true sense of the word compared to traditional industries. Next, I will describe the characteristic of emerging market. I have summarized 5 characteristics of emerging markets. These are low investment, high growth, high returns, diversifications of the investment, the counter-cyclical natures of the economy, generally small market size, and finally, the general emerging of the investor of emerging markets. The main role of the emerging markets is promoting the development effects of the economy, promotes the horizontal financing funds of the horizontal economic linkage, and improves the overall efficiency of resource allocation, expanding the range of investment options, adapting to the diversity of investor and investment motives, transaction, transaction, transa- transact, sorry, transaction motives and interest, and generally providing investor with possibility of obtaining high returns. The rapid growth of economics and the emerging markets, countries, and regions has taken place over the period of their length. And today, they are boldly positioned between developed countries and other developing countries at large terms of economic levels. Diversion of labor system and international economic relation. In its position, they are economically complementary with developed countries or with other developing countries increasing, and thus the mutual economic in relations with these different categories of countries are rapidly strengthening. Specifically, the enormous role played by emerging countries in today's global economy can be summarized as follows. First, it diverts the global economic growth, supply the sales and markets at commodities, and important targets of global capital inflows. However, there are some problems in emerging markets, such as less information, less liquidity, and less power of minority shareholders, cultural differences, as many other factors. The rapid development of emerging markets countries and regions are strengthening their foreign economics relation with major positive factors in the development of complementary world economy, from which both developed and developing countries will benefit. Due to the increasing position of emerging markets countries and regions in the complementary world economy in their international influence, it is difficult to solve various problems affecting the complementary world without their participation. As early 1999, the Group of 20, G20, was formed mainly by emerging markets countries, although there's no group in the real sense, but only the form type of organization. It is considered to be the market's emerging countries as new group of countries can complement contemporary world economics arena. Developed countries and international economics organizations are aware of this, such as the G8 Annual Summit from 2005, inviting Brazil, India, China, South Africa, Mexico, and other countries to attend, indicating that emerging powers as represented by the developing countries will play in the increasingly important roles in today's global governments and the transformations of the global political and economics order. That's today's. Thank you.